Hi, everybody, and welcome back from spring break. I hope you had a good one. I hope you did fun stuff, relaxed, otherwise enjoyed yourself. Welcome back. And we are now on to week number 10, and we're going to be talking about chapter 12 um, this week. But I thought this is, we're around midpoint of the class, heading into the back half of it, and I thought I'd take the opportunity to invite you to meet with me one-on-one, uh, to talk about where you're at on the class, what you need to do to finish strong, and just kind of see where you're at. So if you want to do that, go ahead and if you look in our class our class site um, under content, that first tab, you basically the module that you went into in the first week of class. Down at the bottom, there was where we had the opportunity to sign up for a one-on-one meeting with me. Go ahead and sign up for that. If you have to log into it, use your Oakton Gmail um, credential. Basically your Oakton Gmail address, and use that to get into there and actually sign up for a time. I have time set aside for the for this week and next as well. So if you're interested in doing it, it's not required, but if you're interested in doing it, please do. The other thing I want to point out about that is um, that we're going to meet in the virtual office, um, and if you haven't done that yet, that's under Mr. Benjamin's virtual office up here. That's how you actually log into that. Okay, so please do sign up for it. Students who have done that in the past have always finished strong and have done well. So I fully encourage you to do that. Okay, so let's talk a little bit about chapter 12. Chapter 12 to me is one of the most important chapters in the entire book because we're going to talk about the capital budgeting decision, and it's really basically ways to think about how we look at longer term investment decisions. And the methodologies that are used here are very commonly used in organizations. I mean, I can't think of an organization I haven't been at that didn't have this type of thing set up. So, and it's how the top management of the company actually makes decisions on what to actually fund and to support of the initiatives that they have out there. I've done them many, many, many times. So I can tell you, the higher up the food chain you go, you're going to be doing this type of a process called capital budgeting. So um, anyway, it's a real good chapter to pay really close attention to. You probably, as you advance in your careers, you almost certainly will be using this. Um, the other thing I want to point out too is that in this chapter, it also points out using a financial calculator or Excel. You can really do either one to solve a lot of the problems here that we have. Um, but so if you have a financial calculator, feel free to use that. But if you have access to Excel, which I think is an important thing to do, then you can work the problems out in Excel as well. So either one of them is acceptable. You can do that. You can even do it on the test when we go to take the test. Okay, so the learning objectives, basically we're going to understand what capital budgeting decision means. It's a representation of a long-term investment decision. Um, you're going to use cash flows rather than earnings. I can tell you um, in practice, a lot of organizations still like to tie somehow to earnings because that's how the top management is basically um, what they're accountable for. So they like to be able to make decisions that way. Um, you, you don't be surprised if you end up doing both. But cash flows are typically used in the finance world. Um, understand that the payback method of considering how to which types of projects are the right kinds of things to do are are useful and sometimes used, but typically we're going to look at internal rate of return or net present value of some form or another, one of a calculation of one of those two things, and that's usually used or something. And by the way, there's a lot of variations on it. Just keep that in mind. But that present value or internal rate of return what are typically used in doing capital budget analysis. So pay close attention to those, and then recognize that the discount or the cutoff rate is normally the cost of capital, and you'll see that connection as you go through the chapter. So it's a really important chapter. It's an interesting one, and one that I can honestly goodness tell you use it a lot in management. So take your time, look it over, and like always, if you have any questions, certainly let me know. The homework's due on Wednesday, and but don't hesitate to reach out with any questions you might have. Okay, well, good luck for this week, and we'll talk to you next week. And sign up for a one-on-one.